You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means we're back. Yes, it's time for the option block. You know, these week-long weekend holidays, they're fun, they're great, get some time to relax, but then we miss talking to you guys, so we're excited to do it yet again. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get our stuff, the iTunes, the TuneIns, the Stitchers, the SoundClouds, and so on and so forth. You can always grab us via our mobile app as well, or just go to the website. It's all there, as well as a lot of great read-in content. If you like to consume content with your eyeballs rather than your ear holes, we got you covered there as well. So most of the senses, we don't have an options smell system yet, but once we get that covered, we'll have all of this, and then maybe some sort of nice texture for the touch, then we'll be good. All the five senses will be covered. In the meantime, of course, you can always join us live every Monday and Thursday, at least when we're not off on Monday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Grab that link, set it, and forget it, and you're good to go. And of course, however you listen, live after the fact, maybe riding a donkey through the center of town, however you float your boat, make sure you hit us up. Questions, comments, insights. I won't speak for all of them. I like to hear from you guys. All right, and joining me on the old program today, let's spin the wheel of fun known as the old Option Block All-Star Roulette Wheel. And let's see who we get. First, it has landed on that quaint little provincial hamlet just outside of Chicago, home to Skippy's Gyros and Lemonade, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. Sir, how goes the Skippy's Gyros and Lemonade?
Always happy to be here. I haven't been to Skippy's in a month or so, but now you're kind of getting me craving it now. I'm thinking I might make a run to Skippy's in the next week or so.
We really need to get a sponsorship from those people. I plugged them so much. I've at least doubled their business from 4 now to 8, so they owe me big bucks. They owe me big bucks out there.
Skippy's has a couple spots around here. They have more than 4 people. They're a staple around these parts.
12. Three places. 12. I'll give them 12. There we go. So we doubled it to 24. All right, moving on. As we look for the checks forthcoming from Skippy's Gyros, let's move on to the land of Maine, where they are bemoaning their lack of all things ice, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. G, welcome back to the show. I'm glad you can join us through your tears that your much-beloved ice rink is already kaput so early in the season, sir.
You know, bemoaning the destruction of my ice rink, which is now maybe the world's biggest martini glass, I don't know if I deserve that so early in the show. I'm
just pointing out the truth. By the way, that'd be a pretty dirty martini, huh? You know, mud pit, kind of glad got that. You see where I went there? That was pretty good. Alcoholic humor this early in the show. That's good stuff. And also joining us, I won't make any comments on the alcoholism. I'll leave that to the Rock Lobster to sort out. Instead, we'll move on to this neighboring state of New Hampshire, where I do believe they might still have some ice, where we are joined by good old Matt Ambertson of ORAT's fame / infamy. Mr. Matt, welcome back to the show, sir.
You are on a roll, Mark. Here in New Hampshire, we have, unfortunately, opioids and snow and ice, and it was 79 degrees yesterday, and now I'm looking out at dumping snow. So we're schizophrenic up here.
Speaking of schizophrenic, I'm getting two of you coming back at me. So if you're using speakers or anything like that in the background, make sure to go ahead and turn those off so we don't get that. It's fun, but it might be a little overwhelming for the listeners after a while to have the double mats coming at them. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show where we break down, surprise, surprise, what was trading, what was going on, what was lighting it up. A bit of a mixed bag on a lot of the indices. Unless you're one of those Dow watchers out there, then you're kind of ringing your party bell because Dow closing up strong, up about 0.7 of a percentage point or so. S&P kind of flirting towards the end of the day with that also important 2,700 level. No, we were here a while ago. Then we kind of moved off it. A few things happened in the interim. Now we're back at this 2,700 level. In fact, here going into the after hours, 27, a little bit north of the 2,700 level. It seemed like for a while there, Uncle Mike might be sad that, we weren't going to break it, but it seems like we are there now. So firmly north of 2,700, at least for the time being. Got a few more minutes left here. We'll see how all that plays out. And the tech-heavy NASDAQ actually taking a little bit of a break today, pretty much almost literally unched to slightly down on the day. So a bit of a mixed bag, kind of depending where you look at the economy. You look kind of in the old school, kind of Dow 30, you got a nice strong day. You look at the broad kind of S&P, kind of a mixed. And then the tech-heavy NASDAQ kind of mixed to off on the day. So a bit of a mixed bag, kind of depending on where you're looking. All this mixed did not reflect at the end of the day out there in the VIX cash, though, off about half a handle or so, right around 19.5 level. So shy of the 20 level. So if you were paying attention to that and you were watching that, I have to remember where my prediction was, but I do believe I was down in the 17.5 range, I think, for the crystal ball for all of you. So we'll see. Got another day for another two handles to come out of that. I could see that happening, in which case I would be a happy camper. All right. And a lot of reasons, not just for my crystal ball prediction, but for all sorts of reasons. But Uncle Mike, since you're a resident bull here, I will give you pride of place. Does it put a big smile on your face, sir, to see that 2,700 level holding firm through the end of the day?
Yeah, but I'd smile either way. I'm a pretty happy guy in general. Today overall was interesting in that yesterday we get the Fed minutes that come out, and overall during the day we had financials leading the way, but then towards the end of the day yesterday, financials kind of went right back to where they started on the day to finish relatively flat. And then today, financials remained flat, and then they kind of tapered off towards the end of the day. And so with what's driving this market today, it's we're getting a downturn in financials, down 0.8% roughly, and then we also have a rally in energy. So these are usually things that it's kind of an interesting combination in that we have a flat tech market right now with our XLK, for example, up 8 pennies on the day, so it's relatively flat. Energy is up and financials are down. So it's always interesting to see where we go in the following days after we have just kind of it's not a broad-based sell-off. Not everything is broadly flat, and we're not having a broad-based rally. We just have different things happening in different areas of the market. So I think that with that in mind, we could see some a little bit of a comeback tomorrow in the financials, or who knows, it could continue to go lower. But with that, I'd be looking to see more things getting in line, so to speak, over the course of the next couple of weeks, or I should say, at least next week anyway. Who knows what'll happen the week after? We might go down. We might test the 2,500 level in the S&P again with what's been happening on it. One point of note that I do want to mention within the tech world, the fruit company Apple up just under 1% on the day. So even though technology was roughly flat on the day, Apple decided to buck the trend and said, we're going up. And that's kind of what I'm seeing today overall. And I'm excited to hear the analysis coming up with the VIX.
Speaking of Apple, I was going to get to this later, but you just brought it up, so it's kind of funny. You've often bemoaned the lack of innovation over there in Apple land. Again, you said it has failed your Uncle Mike Innovation Index. Well, some people may disagree with you, sir, including notably Fast Company a couple of days ago, ranking Apple as the world's most innovative company for 2018. Even though they even mentioned in the article they've not had a hit since the iPad in 2010, but they talk about AI and other things like that, CareKit, Apple Music being major things. So I don't know, Uncle Mike, most people seem to be in your camp that Apple kind of doing a lot of hashtag Me Too stuff these days in terms of just iterations on old products. But a Fast Company disagreeing with you, Uncle Mike. Maybe that's part of the reason the stock getting a little bit of a boost. What say you, sir? They're thumbing their nose right in your eye in your innovation index.
Well, I'll thumb it right back at them, by gosh. I think that Apple's definitely a good company. They make very good products. There's no denying that. And they charge a lot more than other companies do for similar products. Thus, they make more money. So you can argue maybe it's higher quality. Who knows? But the point is that they make very good money. They make very good products, and they're a very good company. But they had set the bar so insanely high for themselves that if they're not changing the world, it's as if they're not going to move. Now, they still move. They're still a good company. We still hold them in a lot of the portfolios throughout RCM. But the bottom line is that if you want to compare what they're doing now to how the iPad changed the world, how the iPhone changed the world, it's going to be difficult to beat.
Yeah, those are big ones. I think we all know what these rankings really are. They're ways for media company to maybe endear themselves for other things out there. But yeah, I think a lot of people thought that was very surprising. The one area where you probably could level a lot of criticism against Apple of late is in the lack of innovation. Yet there they are. And of course, they're rallying today. So go figure. Let's move on to the New Hampshire view on the markets right now. Matt, as our guest, will get you right there squeezed in because we know the Rock Lobster. He can go on forever. So we'll make sure we get you in first. He's already taking umbrage. I can see it. But that said, Matt, we'll get to the earnings stuff in a little bit. But that aside, what was catching your eye in today's market activity, sir?
Yeah, I like to look at some slightly different things. I look at things like correlation and the put-call steepness of the strikes. So we're seeing quite a bit. I look back 1 week, 2 week, and do you believe it was 3 weeks ago when we had the short vol induced flash crash, or I'm not sure what Andrew's calling it, but so what's been happening in the market is the correlation to the SPY is up, and that's not good for the market in general. You like to see in a healthy market diversification paying off, and now with correlation higher, the more you diversify, you don't get the benefit that you were getting before that short vol induced crash on the 5th of February. So the correlation's up. That's not a good sign. Also, the skew, or let's just say the implied volatility of the low strike puts versus the high strike calls is up. So that's up quite a bit from before the mini crash to now, almost 26%. So people are buying puts again. It's fashionable to buy the out of the money puts, and so that's what I'm seeing, Mark.
Oh, it's always fashionable to buy those nice 5% on the money puts. And don't you want to surrender somewhere between 8 to 10% a year, Matt? But then you can sleep well. That's such a fashionable thing to do.
Yeah, we talked about the back tests and about buying those puts and how much they cost, and they are very expensive. We've tested ways that you can do it somewhat reasonably, but it's like an insurance policy. The bigger the deductible, the less you're going to pay. The deductible in this case would be how much of the market fall that you won't be protected in. And that's a very expensive 5% that you just mentioned, Mark.
Yeah, that's a pricey 5%. Let's move on. Speaking of a man who likes his pricey, juicy puts, and he loves nothing more than paying a lot for any trade. He doesn't like getting his juice. He likes to get his juice for pretty much as possible because he knows that cost equates to quality. That said, Mr. Rock Lobster, what caught your eye in today's activity, sir?
You know, if people didn't know you were facetious half the time, they would be awfully confused by your statements. You clearly have not taught a lot of retail traders.
I like to pull a little wool every now and then.
So I constantly being reminded to, I cannot make any mistakes in my nomenclature because people get confused about that. But besides that, one thing I just was remarking, I was looking at this with a client, well, I think today. And now if you had to guess, right, put on your guessing cap, everybody, where would you think the VIX March future is relative to where it was last week? Would you say that serial future is higher or lower
than where it was last week?
Last week this date. I'll give you the date is the 15th. Okay, don't cheat.
My spidey sense says it would be lower, but the way you're putting that question makes me think it's the opposite of that.
I would agree with you on that, Mark.
It's higher.
See, I knew you were coming at me with some sort of pretense, sir.
Oh, I'm sorry. Am I throwing out some sort of confusing statement to hopelessly confuse Mr. Tosaw or our listeners?
You are a font of confusion.
Shame on me.
You bring confusion and delay, as you are fond of saying.
So, what this is I think so. What's happening is you're like, why is this? So I'm confused. So Andrew, why is this? So one thing is, so last week we had essentially just more backwardation in the VIX futures. And I have to say this, it's been a while since we've had sustained vol at this point. And I had to retool a lot of timelines and things because I haven't been as aggressive as I needed to be short term on a couple of things. But so I guess what the short answer is, the futures usually discount. Their job is either to discount too much volatility into the future, or what they do is they just recreate the time value of volatility in the future. So when VIX is really low, they'll say, well, we'll just add the time value for volatility in the future and they'll be higher. And if VIX is really high, everybody thinks, okay, we can't stay that high, so we're going to discount volatility in the future and the futures will be lower. And then we have a bunch of ways to trade around those future spreads and stuff that we teach. But what's happening now is, it's now kind of 2 weeks into this, week 3 maybe, and we're still getting pretty good swings intraday, like 1%, more than 1%, 1.5%, which is very hard for VIX cash to go low. So to really see the break and vol that we want, we're going to need to, I guess what I would say, return to some sort of normalcy with the curve, which we don't have. We have the curve kind of hanging up there because VIX is still moving, and it's almost like, and this is where we were talking about this. I think the best trade you want right now is a trade that makes money orbiting. So it's kind of probably some sort of short gamma trade. Last week it was sort of the opposite because vol was so high and things were moving so hard in a direction. Now we kind of were up 1% and then we're back, and then we might be down 1% and it's just not, you're not doing very much. But you could sell, you could sell options that are out of the money like 10% for quite a bit of money now, certainly a lot more than you could a month ago. So those kind of trades, I think, start to look better. Short-term vol trades where vol might be weakening would look better if you have to have the ability to close them, or maybe more, or you got to switch gears and say, where's vol going to be a month from now? Will it be lower? So that's what I think. But part of the futures are now, they're starting to close that backwardation gap a little bit, I think. Today, as we closed, the future closed. I just want to look at the last print. So VIX closed 1872, and the future closed 1807. So it's still about 72 cents. It's not the $2.50 it was last week, but the gap is starting to close a little bit, and we'll see. if it actually just kind of sits at some point. So when I look at it, I think the flatness of the curve to me is one of the more important signals. So if you get there and kind of stay there, I think it could be more interesting trades. And like Matt said, flat doesn't mean vol's necessarily going to go down. I think flat means that the market is more poised for vol to go in a direction. So just as they say, that high correlation isn't good, but that high, if it starts to peter out a little bit, maybe we rally or just kind of peter on or poop along on the upside. But I think if we get flat and don't drop in anything, then you're still looking for like a good drop in either a good drop in vol or kind of those hard spikes that can make a trade interesting. So I think we're sitting there. That's where vol is. We haven't been able to break out of what I call, basically a higher vol environment. But so to me, trade, if you want to like trade options on any kind of short term, trades that do better when things sort of orbit around and are not necessarily directional. Like last week, probably anything directional with a little gamma worked a lot better. This week, I think that worm is turning a little bit. So anyway, that's where VIX is. Things are a little bit closer than they were a couple of days ago as far as that cash and futures sort of coming together. And remember, that's all market expectations. All that is why do I look at that is because you have the sum total of market participants looking at volatility that are interested in volatility. And that is, you're basically kind of reading their mind and reading the pulse. And that is in the VIX futures. So it is a good source of information, especially if you're interested in trading vol or trading the market in general. So that's what we got. And right now, I'd say, if anything, the trend is still for, I think, VIX softening a little bit. And possible we could see a drift lower in the vol futures, but I ain't expecting it to happen tomorrow. But I'm ready.
All those people who have been betting on tons of VXX erosion, they're hoping you're wrong, Mr. Rock Lobster. They want those futures to come in hard, and the stubborn resistance of these futures is working against them. Sure, but so let's see. Well, maybe we can dip in and see what we can find in some of these perhaps earnings events, these kind of micro events that are kind of fun. It's been so macro heavy of late that we all kind of forgot earnings season, still rocking and rolling. So let's get to, there are a couple popping off after the bell. What do we got here? We'll start with everyone's favorite domain registrar, and I say favorite with air quotes. This is GoDaddy. People probably loved or more likely hated their old commercials that they seem to have gotten rid of now, probably thankfully. GoDaddy closing today right around $55.50, off about a quarter intraday. They're pricing in a little bit north of $4, about $4.30 or so. So just right around 8%, a little bit shy of 8%. And so far in the after hours, they're up about 4.5%. Looks like about $2 and change, about $2.50 in the after hours. So a little bit light here, but they're pricing in some actual juice here in good old GoDaddy. We'll see if this domain registrar merits this amount of vol, as we also look at another old friend. I haven't talked about this one in a while. Hasn't been on the odd block in a while. This is INTU, maker of everyone's favorite, or perhaps least favorite again, tax software and all their sorts of financial software out there. They make a lot of stuff. Closing today right around $172, off about $1 and change, so about 0.7%. They were pricing in about a little over $10, about $10.50, so right around 6%. So far in the after hours, selling off about 4%. So it looks like they're off about $7 or so in the after hours. So nice little drubbing here for INTU. They're pricing in some juice, and they're close to delivering. We shall see. So some areas that we wouldn't traditionally conflates with volatility, domain registrars, and INTU, financial software, seem to be perhaps a little bit juicier, a little bit more active than perhaps we'll expect. But that said, they're not delivering in the after hours, so perhaps it was overdone. That said, Matt, let's turn our attention to you. You guys over there at ORATS have kind of been, I don't know if you're the official, you're the unofficial, in our eyes, you're the official keeper of the earnings season scorecard. We've talked about some of your data before about, looking at what the market is pricing in versus what they've delivered in the past quarters and past years and how things are going. So Here we are, roughly, I guess you can call it halfway through earnings season. A lot of the big names are already behind us, but still more to come. That said, maybe, Matt, what are some interesting takeaways, some interesting surprises, and maybe what are you seeing on the radar? What's your data telling us to watch going forward here for the rest of the earnings season?
Yeah, Mark, we have done quite a bit this earnings season. And what we like to do about halfway through is look back and look at what factors are we could look to predict what's going to move more than expected. So we look at for the market expectation, you look at the straddle price, and the straddle, of course, the call plus the put, and you could say that, okay, well, the stock has to move more than that in order for me to profit from it. But it's a little bit more complex than that for an earnings announcement, because what's going to happen is the earnings is going to announce, and you're going to have a certain amount of days to expiration left. I mean, the weeklies take those days to expiration out, but many stocks still have just the standard expirations, and so you have to find some way to normalize or take out that premium that will be left afterwards. And so that's a big job that we do at ORAS, is we have set up with thousands of observations what we think is a probability distribution shape for the post-earnings move. And then what you do is then you say, okay, what's vol going to fall to most likely? So we have techniques for looking at the vol curve and taking out the earnings effect. So an earnings stock might be a 40 vol today and expect it to fall to maybe 30 after earnings. And so then what you do is then you can isolate the premium that you're expected to have after earnings, for the amount of days that you have left, and then you could come up with a very good assessment of what the market thinks a stock is going to move on earnings time. So you mentioned GoDaddy, for example. GoDaddy, we have the straddle price net, so the expected move at about $3.10, and what we do then is we try to find other factors to, what do we think about that $3.10? Well, if you look at the historic moves, that's, over the last, let's say, 3 years, that's one thing that you can compare it to. So GoDaddy has that. And then, but what we've found is the most important factor, and this is the little tidbit out there, the most important factor is the past straddle prices. So, we've looked at many different factors, and the past straddle prices on average, again, going through that tedious job of taking out the premium that is expected to be left after earnings. And so, for example, GoDaddy, their past straddles for the past 3 years has been $3.95. So that's one where we would have expected GoDaddy to move more than the market's expecting right now. So, those are the types of things that we're looking at, Mark, in order for our clients to be more prepared for these movements around earnings.
Yeah, that's something that doesn't come as a surprise to me when you say that, because we've often talked about that anecdotally. We haven't crunched the numbers, so I'm glad you guys at ORATS have, because we see this every cycle. Whenever they price in a small amount of juice going into that event, and then the company blows the doors off, we see, of course, the subsequent cycles, at least the next one, we see a lot of people, that straddle is going to, of course, be naturally a lot heavier, a lot heftier, a lot wider. We saw that again this cycle, because last cycle, of course, names like Microsoft and others blew the doors off. It surprised everyone. I guess you can call it that surprise Thursday, that last cycle, where everyone was doing 2x, 3x, 4x what they were pricing in from their straddle perspective. And so we knew coming into this cycle we were going to see that priced in, and we did. And then perhaps not surprisingly, names like Microsoft actually underperformed from their straddle, which actually maybe was surprising, because I know, Matt, that was one of the names that you guys had highlighted in your data as it seemed like maybe it might have a chance for underperforming, not just because of what they had done previously, but also even despite the fact that they had such a big move last time, they still were pricing that straddle, at least comparatively, fairly low. And yet even in that low level, they still they opened up the next day, I think almost literally unched her. Pretty as close to it as you're going to get in terms of the financial markets, as close to that bullseye as you can get. So that was certainly one of the surprises for me, Microsoft, and maybe the underwhelming performance of its earnings. Were there any other names, Matt, that really resonated with you and your teams in terms of you guys were expecting something big and they under-delivered, or maybe vice versa? You didn't think they were going to knock it out of the park, and they actually did?
Well, like I said, let's take a look at Microsoft, because when we talked about Microsoft beforehand, we were looking at the historical kind of projected moves. And so if you were only to look at the past moves, you would have said that Microsoft would have been undervalued and maybe a buy. But now with this kind of this research that we've done just for this expiration, going back and looking at Microsoft, the past straddle price average was actually below what they were making or what they were estimating the move to be in Microsoft. So that had in effect a contradictory signal, and Microsoft went the way of, like our darling, the past straddle price average, and it underperformed just like the past straddle would have said it would. So, there's so many of them, Mark, that but we, what we like to do is go through all of them, and what we'll do is we'll say, okay, if you would have traded the past straddle price, you would have won 54% and had a return with the stock price as the denominator, about 2/3 of a percent. The past actual was a higher win rate, but the return was lower. At ORATS, our clients, we put a blended rate together, and we also look at some a little bit more complex measures, such as historical versus implied levels right now. We're hitting about a 2/3 win rate right now, 66%, and an average return of 1.8%. So the bottom line is, there's some good signals out there on their own, but if you do some type of combination of those signals, you'll get fewer observations but a higher win rate, Mark.
There you go, listeners. Check it out over there at orats.com, ORATS.com, to find all that data. Or follow them on Twitter at OptionRats. That's an easy one to remember. And of course, we also repost a lot of that stuff at the Options Insider, so you can find it there as well, and tweet it and share it for all that fun stuff. So no shortage of ways for you guys who have been asking us for quite some time, hey, where is there a good source of info about all things earnings straddles and earnings performance? And it's quite frankly been pretty sparse for a long time. There was a Goldman study from about 5 years ago that everyone keeps referring to, and that's kind of about it. We've had some anecdotal stuff from other people on the network over the years, but Matt and his team actually cranking away the good fight with the earnings, options, and volatility data. So if you want it, we got it for you. Matt and his team have got it for you. Come check it out. Meanwhile, we got to keep rolling. It's time to break down what else is popping off here after the bell, and just popped off today. It caught our eye. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's kick things off in the Odd Block, as we are wont to do with our favorites, these Tesla Catastrophe puts, Were people trading it up today in these mystery Tesla catastrophe puts? Short answer, yes. Let's start off in the Jan 2019 50s, 5-0, yes, 5-0 listeners, doing nearly 300 contracts today, 282 to be precise out there. Total OI creeping back up towards 37,000 again, a little bit north of 36 right now. I had breached that 37,000 level, then apparently someone decided to take some of these puts off the table. They got just too rich. He couldn't resist any longer. But now a few more piling in today, so we're probably going to get closer to that mythical, magical 37,000 level. If you're wondering, they're 46 cents at 50 going out today. So still 50 cents worth of juice out there. But if that's not rich enough for your blood, go 1 year farther to the Jan 2020 50s that are worth a whopping $2.30, offered at about $2.50 out there. Those have nearly 8,000 contracts open on that strike now. So creeping ever closer towards 8,000, just at 7,000 not that long ago. So people continue to pile in. A little bit quieter on this strike today. Only 28, I say only because one is a lot, 28 of these bad boys lighting it up out there today. Speaking of bad boys lighting it up, we're going to turn our attention now to what caught our eye today. And we've talked about this one before. We don't get attached to talk about it a lot. It's always a fun one when we bring it up. It always sparks some debate. And it came up on our scanners today. So we thought, let's bring it back on the show. This is our old friend XSP. This is the mini SPX contract. We talked about it before. A lot of you had questions. A lot of you had never even heard of this thing. Even though it is out there, it does trade. It does about 15,000 contracts a day. Today it did a little bit more than that, 94,000. Of that, about 179 to 1 puts over calls. 94,008 trading precisely, only 523 calls. The rest, 93,000 and change, came in the puts. So clearly we're going to focus on those calls. That's where the action was. Of course, I am joking, listeners. You saw a pretty sizable, what looks like someone perhaps rolling some short puts out here. We saw the Feb 275 puts. These are the weeklies expiring on the 23rd, so tomorrow. Someone taking, looks like a bunch of those off the table, starting off with about 36,000 of those paper coming in and perhaps lifting those out, taking those off the table, 36,000 and change for nearly $3, about $2.93. Then turning around and blasting out, going out and down a little bit on their strikes this time, rolling out to the May 260 put strike, selling those out for about $4.18. So doing it for $1.20 and change, depending on where they got more, because they did more afterwards. A total of about 42,000 of these Feb 275 puts going up today. That's on open interest of about 43,000 and change. So clearly they are closing. They waited till the very last minute. They waited till the day before. Well, technically not last. They could have had another day to go, but pretty darn close to the last minute for these bad boys to be rolled. And let's go on out to May to see exactly how many total they ended up doing out here. If my scroll would keep up with me. Let's just do it the old-fashioned way. Let's scroll with my hand. That's faster. And the total, yeah, a sizable amount going up out there as well. Total 48,264 going up on a whopping open interest of just 3. So potentially, no promises, but potentially they are opening on that strike as well. Let's look out on our old friend XSP. I got a feeling if you follow the show, you follow the markets, you know how XSP has been performing. We had a long bull market followed by a little stretch there recently. Let's call it a little bit of a hiccup. And now back on, at least for the meantime, back on the course. XXP closing north of 270 today, 270.40. Remember, it's a reduced size mini contract out there, 1/10 size contract. So fascinating stuff. Mr. Rock Lobster, we talked about this mini XSP before. Kind of a fascinating beast. A bit of an attempt to push back against the dominance, the hegemony of SPY out there. Not so much most days, but today doing about 100,000 contracts, so not bad. What are your thoughts, again, on, just refresh us on XSP in general, and then B, what do you think about the rolling these puts, wait until the last minute, and then taking these puts that are still in the money and rolling them down to, out to May and down to the 260 strikes?
I'm feeling the hegemony in SPY is safe.
No threat from XSP today, huh?
I'm going out on a limb there. I know. I do. I got to go out on a limb on that one and say, yeah, I think it's safe. I think it's the only customer in this whole product.
Clearly today he was, yeah.
And it looks like their timing wasn't bad either. They try to close their puts, and it looks like they want to roll and sell the 260 ones, I think, and try to make some money back. So I don't know when they put on this initial one, but probably maybe when the market was, 285 or something like that. So as far as XSP, is that somebody trying to steal the thunder from the SPY? Good luck. So all I can say is, why would you want those market wits in the XSP when you could have a penny wide in the SPY? So this is one of those products that I probably sounded good in conception, but is, in actuality is probably next to useless.
They're like, we need something to fight back against this SPY monster. What do we got? We got 1/10 SPX. Go with it. And yeah, you're right. One guy kind of trading it up out there, not a lot others out there. Yeah, if the spreads could tighten up and get some more size out there, it could make a little bit of sense. I don't know, Matt, is this a name that comes across your radar at all over there at ORATS? Do you guys ever get a client knocking on your door and saying, hey, can you run a back test in 5% out of the money XSP puts for me?
Well, the thing that I thought that was interesting is this an index, and isn't this the 60/40? Is this a tax thing?
Yeah, there's a definite tax incentive. That's pretty much the only incentive to be doing this, right?
Right, and so, but the funny thing to me is, immediately in our numbers, I could see that the steepness in the slope, meaning the put call slope, is cranked up in May. Compared to every other month. So the market maker just did it like we used to do it, and just left it 1 month not really related to the other months. So yeah, it's you could tell it's illiquid just from looking at the relationships of the options to one another. But I think it might be a bit of a tax play with a lower price stock. That's what I'm seeing, Mark.
There you go. So if you want a chance to get a little bit of extra juice, perhaps for your May puts, and you don't mind fighting through that spread, a little bit of extra slippage, you got to weigh those two, obviously. Then who knows? Maybe XSP could be in your future. People are always lamenting how they too much correlation between the other SPX and the S&P products. XSP, easy for me to say, XSP, maybe slipping through the cracks there, so take advantage of that. Meanwhile, we got to move on to another. I think this might be a newcomer to the odd block. I don't think we've talked about this one before. This is ILG Inc. If you're wondering who they are, this is formerly Interval Leisure Group. They, of course, do a lot of the timeshares and things like that. Closing today, about 32 and a quarter, pretty much unched on the day. So the name that does about 6,500 contracts a day. So not bad for an odd block name. Today doing 83,000, 68-1 calls over puts. The lion's share of this, listeners, and they have earnings next week, so it's not earnings paper, at least not yet. This is a little bit farther out, actually. We saw a lot of action out here in 1x2, call 1x2s in April in ING. In particular, it seems like someone was really excited about the April 34-39 call 1x2. They came in doing it for size in two chunks. Started off in the morning here. Looks like lift-in offers are pretty close to it on these 34s, 10,000 times. And then blasting away at the 39s. And then they do that 10,000 by 20,000 times. And I guess they decided, that was pretty good. I want to do that again. So they did it a little bit later for a little bit better prices here, doing it to 10,000 by 20,000 times again for a total of 20 by 40,000. No OI on either of these strikes. So clearly all open and interesting if this is indeed as priced. We don't see a lot. We don't see a ton of size net short units, 1x2s going up like this these days. Some other places we see a lot of 1x2s, or used to see a lot of 1x2s in VIX land, obviously, but they were the other way. They were short one, long two, because you don't want to get caught in net short units out there, as we saw a couple of weekends ago, a couple of weeks ago. This guy clearly not afraid of a massive upside explosion in ILG, or maybe he's got some stock in his back pocket just in case. Either way, let's go see why this guy is so confident. Let's pull up a chart here of ILG going back. It's been an interesting year for them. They kicked off February last year right around $19. Since then, over the past year, it's been nice rally home mode, getting as high. Pretty much right now is pretty much the highs for the last year, right around 32 and change. So our friend here decided he thinks there's more upside to go, But he's clipping it. He's clipping it, Mr. Rock Lobster, right around 39. He says, I'll take it to 39, but that far and no farther. What do you think about this trade? And in general, I know you're not really a big fan of net short units. Does this one give you the heebie-jeebies? Sure, sir.
Well, it would, but, you've got, I think this is a timeshare company, I'm pretty sure.
Yeah, they do timeshares.
So, you've got property. We've had that kind of the big property boom, This is one where even if it gets taken over, is it really going to be taken out like at that level? The only thing is, my thought is, 18 cents. Are you really getting a lot for that 1x2? I mean, why bother sell the calls for? Why bother taking the 36 cents? But
what is the risk manager in you? If you see that going up at Carmen line, what are you doing? You tapping the meatball on the shoulder and saying no, no, no?
Yeah, I don't see the great reason for the 18 cents. I mean, if you want to do the spread 1-to-1, I don't think you're gaining a lot. It just makes it more annoying to trade or to manage, or you got to sit there with the whole trade. But I think from a 1x2 point of view, that's 34, 39, 44 for the trade. Good luck. I mean, it's one of those. It's not like it's a growth company, for crying out loud. So it's already had a 100% run in 2 years. So it doesn't mean it can't go up there, but I can feel why they're doing it. I can feel why they're doing it.
You can feel it. You feel it in your bones, and you think to yourself, maybe I need to get myself some upside premium here in a timeshare company. That's what you're thinking. I could see it. I could see it through your chat windows there, sir. All right, we got to keep on rolling. We've been gassing on. Uncle Mike's waiting to gas on. It's Thursday. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, it's Thursday. This means it's time for you to hold court with some options, wit, and or wisdom. Hopefully the Skype gods will smile upon you. I know some previous Thursdays, they have not been so friendly, cutting things off out there in St. Charles. I guess you guys haven't paid your internet bill in a while. That said, Uncle Mike, what do you got in store for us today, sir?
I want to revisit the old 1x2, kind of in the spirit of what you guys were just talking about.
What could have inspired that, sir?
Well, I've actually been thinking about this for a while now in terms of what to do a strategy block on. And with the 1x2 right now, I want to explain a way with which to do it. And I think it could be kind of timely for the market with which we're in right now. So let's say that you own a stock, and I've done this on the strategy block before, but I want to kind of revisit it for the market we're in right now. Let's say you own a stock, you bought in at 50, and the stock's gone down to 40. And you still like the stock for the long term, but you're just kind of concerned that you're down $10 on it. Now, you're in this for the long term, so one way with which you can lower the cost basis of the stock would be to buy another. Let's say you own 100 shares of it. You could buy another 100 shares of it, and then by average, you'd make the stock $45 per share by dollar cost averaging. Now, of course, the advantage is that if the market comes back, if the stock comes back, then your break-even point is $5 lower. But of course, the disadvantage is that you're pretty much doubling your risk. And so let's look at another way with which you can do something very similar. There's some give and take to it. It's not identical. It's not perfect, but it is something with which to consider, and that is a 1x2 ratio call spread. Now, the way with which this would work, let's say the stock is at 40. You continue to own your 100 shares. Now, step one would be, and you do this all in one trade, but I'll just kind of break it down for sake of simplicity. Step one would be to sell two, not one, but two 45 calls for, let's say, $1 each. So you're taking in a $2 credit. Now, that's all fine and good, you're thinking, but Mike, what if the stock goes above 45? Am I not naked one of those calls? Well, yes, you are. That's where the 1x2 would go into place. Now, whenever you sell options, that premium is yours to keep no matter what. Stock goes up, stock goes down, stock stays the same. That premium belongs to you. However, the obligation also belongs to you as well. So let's say that you have this $2. What you can do with it is perhaps buy a 40 call, same month. Now, usually you can do these maybe 1 to 2 months out, sometimes sooner, sometimes later, but typically 1 to 2 months out. A lot of times these will work. The more volatile, the more volatility in the stock, the easier it is to make this work. But with that being said, if you buy 140 call, let's say it's priced at $2. So the $2 that you took in from selling the 245 calls can be used to finance the purchase of the 40 call. Now, of course, I'm making this perfect because it's an example. It never works out like this, but by doing this, you have an even money trade. So let's review. You own the stock, 100 shares. You also own a 40 call. Now, you did not pay anything for that 40 call because you sold 2 45 calls. So you have upside privileges, so to speak, in the stock, and you also have any upside from this 40 call. So right there, you've created double leverage without any additional costs. Now, here's where the obligation comes into play. You've sold 2, not 1, but 2 of those 45 calls. So the first one just acts like a good old-fashioned covered call. If the stock goes above it, the stock that you own will be called away, assuming you hold till expiration, of course, and you're out at 45. The second one, you've created a bull call spread, a vertical call spread to where you have the potential to make $5 on this trade. So yes, you're taking a $5, and let's assume the market goes higher. Yes, you'd be taking a $5 loss on the stock because you got in at 50. However, you're getting $5 that you've basically created out of thin air from that call spread that you bought. So there's good and bad to it. Now, there's different ways of managing this. A lot of times, let's say if it were to go up right away, perhaps maybe you want to get out of the call spread and then just maybe roll up the call, or if it continues to go lower, maybe get out of the stock. I don't know. It depends on what situation you're in with the stock. But a 1-by-2 ratio spread is something with which to consider for a stock repair strategy. Now, the other way with which to do it, let's say that you just got into this stock at 40. You didn't have anything to do with it, but you're like, wow, this thing's dipped a little bit. I like this stock. Perhaps you can buy it at 40, put on this 1-by-2 call spread, and then just have double leverage from the get-go at no additional cost. Different ways with which to manage it, but nonetheless, this is a great strategy to have in your toolbox.
Let me ask you this, Mike, because obviously the repair strategy is a popular use case for this, but outside of that, do you ever entertain this? Like, obviously our friend here, we just talking about him in interval. The stock's up, so clearly he's not repairing anything. He's just speccing on more upside. Is there a time when you would ever utilize this trade to be truly naked net short units, or are you only a repair strategy 1-by-2 guy?
I'm only a repair strategy 1-by-2 guy. Or let's say that I'm thinking I want to buy some more stock. If it were to dip, I might buy 100 shares, put on this strategy, and then if it dips, if I was planning on buying more on the way down, buy more stock at that stage. And I would just maybe use this stock or this strategy initially if I was concerned about it going up too quickly, let's say, and I didn't know if I wanted to buy 100 or 200 shares, let's say.
Yeah, Mike, it's interesting to hear you. What we've done is in our back tester, we've now added a pretty complex thing. We call it trade adjustments, but it seems like it's in the same flavor of what you're talking about, because it's a very popular with our clients to, hey, maybe they're short a strangle or 1-by-2, and now they're challenged on something. They could test, well, if this 20 delta short put goes to a 50 delta short put, what are some of my options? One of the options is you could roll it out. One of the options is you could roll the call down if you're short a strangle or something. So, if you ever want to back test some of these things, I think we might have a product for you. And that's a soft sell right there, Mark.
There you go.
Love it.
There you go, Mike. You got your repair strategy tester. Meanwhile, we got to keep on rolling. So much talking this week, listeners. Not even any time for your mail. You guys, keep those questions coming. We'll answer all of them offline like we'd like to do. Or we'll squeeze you into next shows. Meanwhile, we got to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
I will say this real quickly. We did get this comment during the show, Mike. A favorite of yours, I should say, or maybe vice versa. You're a favorite of his, clearly. What is it, Salman out there, Azar? He's writing in while you're talking, I think because he heard us refer to you as Uncle Mike, and he took umbrage. He says, "Please upgrade him to Sir Mike." So I guess according to him, you are now to be knighted, sir. What do you think of that?
I've been called worse. I'll take whatever I can get.
I think we need to investigate having an Order of the Options Empire, have an official knighthood here at the Options Inside. Not a bad idea. I don't know if Uncle Mike is qualified yet. We'll see. We'll put him under consideration for the OOE. We'll get back to him sometime in the distant future with our determination. Takes a while for these knighthoods to roll out. Meanwhile, though, let's go around the horn again. See what everybody's keeping an eye on for the rest of this week into next week. Let's give our guest pride of place. Matt, what's on your radar for the week to come, sir?
Yeah, we're excited to keep this earnings move report going. We're going to start posting on the Option Insider blog, so we're excited about that. We did post the summary report, so people could head there and check that out. There are a couple really good links. We've made it available in a PDF or an Excel sheet. As Mike reminded me, we've got a lot going on with our back tester. We've had quite a few requests even today for testing signals. So people will have momentum signals, outside momentum signals, or volatility signals. You can plug those right into our back tester. So we've been getting a lot of requests for that. That's what we'll be up to, Mark.
There you go. Check it out, the back tester. You can do a lot of cool. You got a funky strategy. You want to see how it works? That's the place to check it out. Mr. Rock Lobster, in addition to watching that ever so stubborn March fixed future, what else is on your radar, sir?
I think you have to call him Sir Mike of the OI Media Empire. I think that is a proper name for Tosaw now, since he is my cohort in this show as guest hosters versus the all-powerful and seeing Longo on the show.
So that would be the OIME. That was instead of the OBE. You get the OIME. I don't know if it has the same ring to it as the OOE, the Order of the Options Empire. But we'll take it under advisement. No one has. You have to be nominated, obviously, for knighthood. No one has nominated the Rock Lobster yet. So sadly, you cannot be under consideration for the award. But while you're weeping and taking umbrage for that, sir, what is on your radar for the rest of the week?
Mostly, if really just cash to VIX. Other than that, I think I am of the Tosaw mind of short-term cautious but long-term bullish. And I'd like to see if there, is a trade in the vol products. It has been a sketchy trade at best for the last couple of weeks. And if something I think something is going to develop that'll be good when we actually could see, maybe 14 VIX. 14 VIX is a power move. It'll be a power move for the futures, which would crush the vol products. So anyway, anytime I can get some acceleration in that stuff, that's when it's interesting. So I feel like it's getting close. So that's the big thing I'm watching.
All right, and that roar in the distance means the train is coming. For Uncle Mike, they forgot to pay their internet bill again, so let's get him on here before the hurricane comes for him as well. Uncle Mike, what's on your radar for the rest of the week, sir?
2,700, 2,700, 2,700. Are we going to hold it? I think tomorrow's going to be an exciting day, and if we hold 2,700, it'll make it even more exciting for those of us on the bull train.
Oh, you're always on the bull train, sir. You never want to get off. In fact, when it slows down, you just buy more tickets. That's what you bulls do, right? All right, listeners, that music means we've come to the end of another fun adventure. Quite the fun options party, if I do say so myself. Talked about earnings and analysis and volatility. Talked about those stubborn VIX futures. Talked about 1x2s, how you could use them, maybe how you shouldn't use them. Talked about a lot of other odd stuff going on in the world of options. All sorts of fun stuff. If you missed it, maybe you tuned in late after the fact here on the live stream. We always got the podcast coming out for you the subsequent morning to get you up to speed on all things Option Block. So check it out there. Of course, you can find it at the website, wherever you find all of our good stuff. But one last time around the horn, let's check in with each of my cohorts, my partners in crime. Starting out with Matt. Matt, if we're intrigued by all this back-testing magic and voodoo you've been talking about all show long, and we want to kick the tires for ourselves, where should we go? What should we do?
Voodoo. No, this is, everyone uses these back tests.
That voodoo
nowadays.
that you do.
We've been very busy. Pension funds and wealth management shops are coming in. Of course, ORATS.com stands for Option Research and Technology Services. You could hit me at matt@orats.com. Back testing, earnings, bunch of data. Come on over, join the party.
There you go. Join the party and join the man's party on Twitter over there, Option Rats. Give him a few follows, if not just for the handle alone. It's a fun one, easy to remember. All right, and Mr. Rocklops, your same question for you. What is cooking in the land of all things pit of options?
I launched my vol newsletter. You can oversubscribe. Probably the cheapest, best way to learn about how to trade vol products and vol pairs. I put the notes out a couple times a week. There's actually live mentoring with the whole newsletter. People seem to like it, and hopefully it gets better and better as time goes on.
Just go to optionpit.com, or is there a special link to go to get it?
Optionpit.com/vol newsletter. You just go to the Option Pit, the public site, and you will see, vol newsletter at the bottom. Just click learn more.
By the way, I told Sebastian, and I'll tell you, I like the new site, but you got to bring back that guy, that video. That was my favorite part of the website.
I know. We'll make him come back.
Whoever that guy was, I loved him. He made me feel so at ease about my risk management. It was fantastic.
Serious guy. He was serious.
He was very serious. He was serious, but yet calming at the same time. I don't know where you dug him up, but he was fun. Check him out at the newly revised, hopefully soon, Option Pit website. While you're there, sign up for the man's newsletter. He writes it just for you. All right, and last but not least, before the hurricane envelops him, Mr. Uncle Mike, if I'm intrigued by all these skew things, or maybe I want to skip some ticket charges, where should I go? What should I do?
By all means, call me. If you would like a financial advisor who is not afraid of the words implied volatility, and for someone who likes to look for opportunities instead of just putting you in some fund and calling you once a year asking you for more money, give me a call. 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
All right, listeners, call the man up. Kick him some cash so he could pay his internet bill so the town of St. Charles doesn't fall off the map at 3:57 every Monday and Thursday. All right, check him out, mtosaw@rcmfs.com to learn more. And on behalf of Matt and Andrew and Mark, which would be me, usually Mark, and Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. We get to as many as we can, usually on the show. Today, not so much, but we get to them, don't worry. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.